Hello and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here to give you an update on McDonald's previous to the company results published the next week. So in this video, we're going to explain to you what's the situation of the company, what's the main challenge the company has to face, what is also the expectations in terms of results for this new quarter, and also what's the plans for the future coming from McDonald's. We're gonna go through the story of the company in terms of challenge, future projects, and so on. But we also gonna go into details in terms of fundamental data. We're gonna show you how exactly is the equity, liability. So in general terms, what's the leverage of the company, which is one data that I always share with you on every single case for every single company. And we're gonna end this video also explaining the situation in terms of charts. We're gonna analyze the price in short term and in long term to estimate more or less what we could expect in terms of movements on the price of this company. If you didn't got the chance to see our previous report on Tesla, I invite you to review it because the projections we did for that video, it was in line with the results after the company, with the movement price was doing after the results of the company. So it's very interesting, and you maybe find that one interesting. Now, let me share the screen with you so we can go into details through the presentation. If you are not subscribed to our channel, please subscribe to our channel if you wish, just to keep update yourself with last news in terms of market and macroeconomic data and so on. First point, this is the presentation, officially presentation of McDonald's. We're going to analyze all details I just mentioned before. Now, let's start with the numbers, what we expect to see in the coming days during the results. The projection is 6.63 billions, which is an improvement regarding the previous results, 6.5 billion in terms of revenue to 6.63 billions. So it's an improvement, as I say. But, however, if you check net incomes, you will see that actually net incomes are dropping in relation with the previous net incomes. So we're going to pass from 2.31 billions to 2.24 billions. In terms of EPS dividends, the expectation is $3.10 compared with the $3.15 for the previous quarter. So again, it's increasing the revenue, but in net income is actually decreasing if we take in consideration the cost. Well, what we know about McDonald's is super traditional company. In fact, traditionally speaking, also following the strategies from a fundamentals perspective overall, these kind of companies, all school companies has been in the market for many years, and also related with consumption, with goods, with food, is the ones who usually resist the correction, the general correction on the stocks. So that's why we believe this company could be one of the good assets to hold on the portfolio. We're going to analyze that later in terms of charts. You will see what I mean. But in general terms, it's a global recognition for the company, digital initiatives. They are working in what they call the program of drive-through, which is delivery options also in McDonald's, which is in line with another company similar to McDonald's, like Burger King have been doing recently. For the last, let's say, couple of years so far. But driving through is just an initiative that you can order McDonald's. You can also receive by McDonald's the delivery instead of by third parties. Pricing flexibility, we will see that now the main challenge they have is the inflation, the increase of cost, supply chain, so on. These things have been affecting to the main producers for the last year and a half, couple of years, the inflation also. And because of that, we just mentioned here ability to pass on costs through price hikes, insulation from inflationary impact. We will see that actually they launched an initiative to fight the inflation and to increase sales, because after all, what they want to do is, well, if the food are getting more expensive because everything is rising in terms of cost, inflation was, don't forget, almost 10% back in 2022. Therefore, they need to play a strategy to recover part of the customers they lost to the prices, to the rise on the prices. So challenge and weakness, inflationary pressures, the ones we just mentioned, profit margin squeeze, projecting decline in the net income of Q2. We have seen also that the net income is decreasing, so therefore they need to play a new strategy to recover that drop on the net income, slowing comparable sales, Recent quarters saw a slowdown from double-digit increase, strategic shift towards value offering. This is where we're gonna see the new strategy gonna play, which is the $5 meal. And we got here value meal promotion, $5 meal, extended into August, because initially it was only for 4 weeks, but they mentioned that they probably will extend this in United States for August, offering by $5 the whole meal, just to make more accessible for those. They decrease in the margin of profits in these cases, but they try to increase the numbers of sales and numbers of customers. Emphasize on value. Advertising's effort target price constitute customers, potential to improve perception and drive traffic. Analyst outlook, we can see banks like UBS has given a buy recommendation, buy ratings on the company, which based on our analyze, well, we're gonna see from a fundamental perspective, we can see, unfortunately, that the company has certain leverage, which make it more risky from a financial point of view. But in terms of charts, in terms of price, technical analysis purely, the charts looks super nice and is giving us a very attractive discount compared with the previous prices. We will see that in a moment. Investors focus areas: value, meal promotion, future, impact on sales, and countering inflationary pressure. So that's all. They fight inflation by trying to squeeze the reduce the margin of benefit and also of profit, and also trying to reach more customers by offering like a super good deal, which is a meal for $5 in an inflation era like the one we are living right now. Now, in terms of fundamental data, we can see that actually the company has a certain financial leverage. If you take a look, especially in long-term equity, the assets mainly is almost 50 billions, but liabilities is slightly higher, which is 53.4 billions of dollars in liabilities, comparing with the less than 50 billions on equity. Therefore, we should say that it's almost 1-to-1, but it's slightly higher the liabilities over the equity. Therefore, the company has to be careful in terms of how they manage the budget for the coming periods, right? Because the financial risk is high in this case. We also have seen how the dividend is related with the payout ratio, and we can see that the payout ratio is dropping. Therefore, it means that it could be considered overvaluated in terms of what's the dividend they pay, which is decreasing $3.10, like we mentioned before, from $3.915 in the previous quarter to $3.10. So the dividends, the EPS is decreasing while the price is still high compared with the previous quarter. Therefore, yeah, it's overvaluating in those terms. But still, this thing's gonna move in constantly, especially if we see volatility on the prices or on the market. So don't pay too much attention to this ratio. It's just an indicator. Now, going to the charts is the interesting part, the most interesting part, because we got a long-term chart that is showing us that right now, especially consider what happens during the end of 2022, 2023, plus where we are right now in 2024. Overall, we will say we could say that during this year, company has not doing really well in terms of prices, has been dropping constantly, which is good for us if we are considered to take McDonald's in our portfolio. Remember, this is not advice of any kind. I'm just giving to you my perception on the market. I'm just sharing with you my view, my personal view on this asset. And if you are considering to include this asset on your portfolio, please consult with a financial advisor in advance. Now, saying that, $250 seems to be a very strong, clear support on McDonald's, reaching and touched and tested during the 2023. Just pay attention to, let me make a zoom so you will see in detail. But in 2023, we dropped to $250 per share. And from there, we went to $300 per share. So it was a really nice move. And we are facing, again, $250, tested several times, as you can see. We also got a 200 moving average period there. And therefore, we can clearly identify this area around $250 as an area of support. In worst case, if $250 is lost, we can also identify $230 as another new level of support, clear support, that is coming from 2020, 2021. It was touching and testing those $230, which by then it was maximum. So again, I believe we have seen the company dropping during this year, and it's offering at the moment, at the current prices, is offering a big discount compared with the previous prices. So therefore, is not a bad moment to include in your portfolio this company. If it's already in your portfolio, if it will be already included in my portfolio, probably will hold it because clearly I can see that it's close to support levels. So considering to sell the company off will be maybe too late to do that. So far, I mean, if he's quoting about $230, right, which is a support, and in the case it's dropping, that will be the worst case, and we will change completely the strategy. But so far, it seems 200 to 250 to $230 support areas to entry prices. We actually can see on the chart how these candles show us new entries, new buys, new buy orders, pushing the price on $250. Therefore, our perception can get confirmed by the chart. In short term, the things get more interesting because in short term we can see that during the 2024 has been dropping, yes, but since May has been moving a range between $260 to $245, $50. That was the range. Touched 3 times there, which is not really good signal. That in 3 occasions he was trying to break out $260 and attack the new targets, but it couldn't. And still, I think buy and hold in these cases. If we see the stock or the share is close to $250, it's still an interesting area, an attractive area to hold that McDonald's at $250. Hold them as much as possible, as much you need it, and just wait until the price is either reaching $260, $275, which is the next target, and is 50% of the whole range for the last 2 years, or even eventually go for $300 new maximum, new resistance, and from there keep on hold, because at some point McDonald's gonna break new resistance, break out the new resistance, and go even farther than that. So I will say in summary, we got a range of $50 from the bottom to the top, and then if we see a breakout, probably the next target will be $325 and $350. But again, really attractive in terms because it clearly saw a strong discount on the price for the last 2 years, and therefore it's super attractive, the current levels at the moment. I think this report is useful. You find the report useful on your strategies, and if you really like it and you enjoy that, please give me a thumb up and also subscribe to the channel if you are not, to follow up the coming reports. Take care. Bye bye.